Hello everyone. Welcome to another series on GST education. In this video, we are going to discuss a very important concept in GST, time of supply. The question that we are going to discuss is very simple. When exactly does GST liability arise? For supply of goods, we have section 12 of the CGST Act. And for supply of services, we have section 13. Let us understand these provisions with the simple examples. Let us first understand what we mean by time of supply. In very simple words, time of supply means the point in time at which GST liability arises. And why is this important? Because once we know the time of supply, we know when GST becomes payable. It also helps us to decide in which tax period the transaction has to be reported and consequently in which GST return, that is 1 or 3B, the transaction has to be disclosed. It can also become very important for determining whether there is a delay in payment of GST and consequently whether interest has to be paid. So I want you to remember one simple distinction. Supply determines what is taxable, whereas time of supply determines when it becomes payable. Let me give you one example. Suppose I provide a taxable service during this month, that is August. Now, the important question is not merely whether service is taxable. We also have to determine when the GST liability arise, whether it is in the month of August, whether next month, that is September, or some other period. And that is what exactly time of supply tells us. So, supply determines what is taxable, and the time of supply determines or tells us when it becomes taxable. Now let us come to section 12. It deals with time of supply of goods. For normal suppliers or supplies, that is, supplies under forward charge, the basic rule is very simple. We have to identify the relevant dates and take the earlier one. The two dates are very important. The first is the date of issue of invoice, the date what you see in the invoice, or the last date on which invoice is required to be issued. And second is the date of receipt of payment. So earlier, let us take two examples. Suppose goods are supplied and the invoice is issued, say, on 10th August. The customer makes the payment on 20th August. What is the earlier date? 10th August. So 10th August is the time of supply in the case. Now let us twist the example. Now suppose the invoice is issued on the same date, that is 10th August. The payment is received, say, 5 days earlier, that is 5th August. In such a situation, the earlier date is 5th August. So the time of supply would be 5th August. Of course, subject to other rules regarding receipt of payment. So another very important rule that we often miss is the 1000 rule. What is that? This is a special provision where the supplier receives an amount up to rupees 1000 in excess of the amount mentioned in the invoice. In such a situation, the supplier has an option regarding the time of supply in excess of that amount received. This is a small provision, but it is worth remembering because it is specifically provided in section 12. In such a case, the supplier has an option to choose the date of invoice as the time of supply. So, for normal supply of goods, remember one formula: invoice date or last permissible date versus payment date. Take the earlier one. Now we come to section 12, subsection 3. It deals with supply of goods where GST is payable under reverse charge mechanism, or rather RCM. The next question is, what is RCM? Normally, the supplier collects GST from the recipient and pays it to the government. But under reverse charge, the liability to pay GST is shifted from the supplier to the recipient. Now, with regard to time of supply, the question is, when does recipient's GST liability arise? Section 12, subsection 3 gives 3 possible dates. First is the date of receipt of goods. The second is the date of payment, which is determined according to statutory rule. And thirdly, the date immediately following 30 days from the date of the supplier's invoice. Look at the 3 dates. So we have to take the earliest of these dates. Let us take an example. Suppose the supplier's invoice is dated 1st August. The goods are received on 5th August. Payment is made on 20th August. So we have 3 dates: 1st, 5th, and 20th. So the 30-day period from the invoice would take us to the end of that period, with the statutory trigger being the immediately following day. So for our purpose, receipt is 5th August, payment is 20th August, 30-day invoice rule is what? 1st September. So time of supply is the earliest of these 3 days, that is 5th August. Therefore, the time of supply in this example is 5th August. Hope you understood this concept. So, don't make the mistake of thinking that under RCM, the liability always arises when payment is made. Here we have to compare all the dates prescribed under section 12 subsection 3 and take the earliest date. Now, we move from goods to supply of services. Section 13 deals with the time of supply of service. The approach here is slightly different from that of goods. The law gives importance to the date of issue of invoice, the date of provision of service, and the date of receipt of payment. So for normal suppliers, we can understand the provision through three situations. Situation 1 deals with invoice issued within the prescribed period as per the law. First, if the invoice is issued within the prescribed period, we compare the invoice date and the payment date. Whichever is earlier become the time of supply in such situation. An example, suppose a service is provided on 10th August, invoice is issued on 12th August, payment is received on 20th August. Assuming the invoice has been issued within the prescribed period, we compare the two dates, that is 12th August and 20th August. So the earlier one is, that is 12th August is the time of supply. Now situation 2, invoice is not issued within the prescribed period. Suppose the invoice is not issued within the prescribed period. Now the law changes the dates that we have to compare. So we compare date of provision of service and a date of receipt of payment. Again, we take the earlier date. Suppose service is provided on 10th August, invoice is issued late on 20th August or 25th August, and a payment is received on 15th August. Once more, service has been provided on 10th August, invoice is issued late on 25th August, and a payment is received on 5th August. Here we can see invoice was not issued within the prescribed period. Now we compare 10th August and 15th August, that is provision of service and date of receipt of payment. So the earlier, that is 10th August, is the time of supply in such situation. Now come to situation 3. Neither can be applied. This is final. So finally, if neither of these situations can determine the time of supply, we look at the date on which the recipient records the receipt of service in his books of account. So the basic sequence to remember is invoice issued within time, invoice versus payment. Invoice not within time, provision versus payment. If neither applies, recipient's books of account. So we can remember this very easily. Now, let us look at reverse charge in case of service. We already saw what is reverse charge mechanism. Under section 13 subsection 3, the basic rule is to take the earlier of the date of payment and the date immediately following 60 days from the date of invoice in cases to which that invoice rule applies. So unlike supply of goods, where we saw the 30-day period, here we generally see the 60-day period. An example, suppose the supplier issues an invoice on, say, 1st August, and the payment was made on 20th August. Now the 60-day period would expire later. Since the payment was made on 20th August, this could be the earlier relevant date. Therefore, time of supply would be 20th August. So regarding section 13 subsection 3, an important amendment was made in the CGST Act. It says in cases where the invoice is required to be issued by the recipient under RCM, the date of issue of that invoice also becomes relevant. So when you are dealing with RCM service transactions, don't mechanically apply only the payment date and the 60-day rule. Rather, first identify who is required to issue the invoice and then apply the appropriate statutory rule. So I would like to give you an alert. This is particularly important in practices and exams because RCM transactions are an area where the timing of tax payment is frequently missed. Now there is a special rule for associated enterprises. Such situation contemplated is where the supplier of service is located outside India and there is an associated enterprise relationship. In such case, we look at the date on which the recipient records the transaction in his books of account or the date of payment, whichever is earlier. This is a special rule and should not be confused with the normal RCM rules. Take one example. Suppose an Indian company receives management services from its associated enterprises located outside India, say Dubai. The Indian company records, suppose, their service in its books of account on, say, 10th August, but makes the payment on 20th August only. Now compare these two dates. The earlier date is 10th August. Therefore, that becomes a time of supply under this special rule. So, whenever you see a combination of foreign supplier plus associated enterprises and supply service, immediately remember that there is a special type of supply rule and apply this particular rule. And now we come to what I would call as the feedback mechanism. The law first gives us specific rules for determining time of supply. But what happens if, for some reasons, the time of supply cannot be determined under those provisions? The answer lies in section 12, subsection 5 and section 13, subsection 5. So these provisions provide an answer for such questions. It says that if a periodical return is required to be filed, the time of supply will be the date on which such a return has been filed or is required to be filed. And in any other case, it will be the date on which tax is actually paid. So think of this as the safety net. Normal rules first. If these rules cannot determine the time of supply, then feedback provision applies. One alert I want to tell you, this provision may not be the one we use in ordinary transactions every day. But as a practitioner, one has to know that Act provides a final mechanism so that the time of supply doesn't remain undetermined. Now we come to a very practical provision which is provided in section 12 subsection 6 and section 13 subsection 6. Suppose the customer delays the payment. Because of the delay, the supplier charges additional amount. For example, interest for delayed payment, or there can be late fee, there can be penalty as well. So the GST law treats such additional amounts as part of the value of supply, subject to applicable provisions, of course. Now, the important question for our present discussion is, when is the GST liability on this additional value created? The answer is the type of supply. To that extent, to the extent of the additional value, it is a date on which the supplier receives that additional amount. Suppose the original invoice was rupees 1 lakh. The customer delays the payment and subsequently pays, say, 5,000 rupees as interest. So this additional 5,000 rupee becomes relevant for GST levy when the supplier receives that additional amount. Therefore, for the additional value, the time of supply is linked to the date of receipt of that additional amount by the supplier. So remember that we are not reopening the original time of supply of rupees 1 lakh supply, but we are dealing separately with the additional value arising because of the delayed payment. That is a key. Before we conclude, there is one very important reason amendment which should not miss. The specific time of supply provision relating to vouchers under section 12 and 13 have been omitted with effect from 1st October 2025. Therefore, if you are referring to older GST provisions or a study material or some other textbooks or study notes, you may still find a separate provision explaining the time of supply of vouchers. Please remember that provision has now been omitted. So when studying or advising on GST nowadays, always check whether the material you are referring reflects the law applicable from 1st October 2025. So this is a very good example of why GST is a continuously evolving law. We should not blindly rely on all the notes and all the videos. Always check the current statutory provisions. So let us make a quick recap. Section 12 deals with the time of supply of goods. Section 13 deals with the time of supply of service. For normal supplies, we generally compare the relevant dates and identify the dates prescribed by the Act, often the earlier date. And for RCM, there are separate rules for goods and services. There are also special provisions for associated enterprises, fallback situations, and additional amounts such as interest for delayed payment, etc. And finally, remember the important 2025 amendment for relating to vouchers. So the earliest way to approach time of supply is first identify the nature of supply, whether goods or service. Then identify whether it is forward or reverse charge. Then identify the relevant dates and apply the specific rule. Once you determine the time of supply, you know when GST liability arises. That's all. If you like this video, please subscribe, share, and watch.